Welcome back to 15 Minutes of Finance. This is the tax plan where I help you keep more of your money. It is Thanksgiving week this week, so what better thing to talk about than family? Specifically, in the tax world, we're going to talk about the Child Tax Credit and how to receive the highest portion of this credit for your situation, and hopefully learn some of the rules and maybe potential pitfalls to avoid while maximizing this credit. I know for me, family is usually the thing I'm most thankful for. My wife and I welcomed our first son, our first child at all, into the world this year on July 21st, Lucas Paul West. So that's for sure what we're most thankful for this week, and focusing on that, especially as we go into Thanksgiving and spend a lot of time with family. So thought what better topic to talk about today than the Child Tax Credit within the tax world. So let's talk about it. What is it? So a lot of people kind of understand at a base level that this thing exists. Anybody who has their first child kind of has in their mind, okay, I have a kid. Don't I get a tax break for that? Don't I get a tax credit for that? So it's on most people's radar. Probably a lot of people don't necessarily understand the ins and outs of that credit. So hopefully I can help clarify some details to make sure that you don't fall into any pitfalls and fail to maximize this for your situation. So let's talk a little bit about this credit in terms of kind of the general rules and requirements and things like that. So what is the Child Tax Credit? The Child Tax Credit is an IRS federal tax credit. A portion of it is refundable, which you might remember from a lot of episodes. Refundable means you can get money back above and beyond the taxes that you owe for the year. So a portion of it is refundable, and we'll talk about that. It is a credit for taking care of an eligible dependent. So there's two kind of categories here. So the Child Tax Credit, CTC called that, is not necessarily just for explicitly biological children. So here is how the IRS defines the eligibility to claim the Child Tax Credit. They must, quote, be your son, daughter, stepchild, eligible foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or a descendant of one of these, for example, a grandchild, niece, or nephew. So it is more expansive than a lot of people realize. There's lots of people out there, God bless you, who are taking care of grandchildren, who are taking care of their younger brother and sister, who are the primary caretakers for people above and beyond just their biological children. The IRS recognizes this and allows a lot of these other category of individuals, depending on how they're related to you, to qualify for the credit. Here's a couple other kind of requirements on the general side here. They must be under age 17 at the end of the year. They must provide no more than half of their own financial support during the year. They have to have lived with you for more than half the year, be properly claimed as your dependent on your tax return, not file a joint return with their spouse. This is if they're married. Have been a U.S. citizen, U.S. national, or U.S. resident alien. Okay, so those are the requirements under the IRS. This is directly from the IRS's website in terms of who qualifies. Okay, so that is who is eligible for the Child Tax Credit. So now let's talk about the credit itself. Let me follow up a little bit because I started this by saying there's two categories. Okay, so if you take care of somebody and you meet all of these other requirements, they're under 17. I believe actually the under 17 has some stipulations that that might not necessarily be required as well. I know for sure there are requirements. I believe if they're a full-time student, it can be under, I want to say 24. It might be 22. So some of these things slightly change, but if you meet these other requirements where they're living with you for more than half the year, you're providing more than their support, they don't file their own tax return, they're dependent on your tax return, they meet these requirements, but they're not one of those specific familial ties listed here, okay? There's another credit called the credit for other dependents, and that's where you have a child or a dependent who lives with you, and they're not a, quote, qualifying child based on those requirements for purposes of the child tax credit, but they may still qualify for the credit for other dependents. I won't get into all of these other credits, including this one here, so just know there is likely a tax credit for you if you are the primary caretaker of a dependent that is not one of those family ties that I specifically listed here. You're not necessarily out, so just know that there are other options for you. I'm sure eventually we'll talk about that on another episode. So let's talk about now the child tax credit, assuming they are a qualifying child for the purposes of this tax credit, okay? The tax credit is fully available for anyone earning under $200,000 if single, or $400,000 if married filing jointly. So what does that mean? The full amount of the tax credit is $2,000 per qualifying child, okay? $2,000. So if me and Michelle earn less than $400,000, and that's our income, okay, we can claim the full $2,000 for our son. Okay, we get a tax credit for having our child and taking care of our child. If we were to make $420,000, let's say, the way that it phases out is for every $1,000 above the income limit for us, because we're married joint, that's $400,000. The credit amount goes down by $50. Okay, so to do some basic math here, if we have $420,000, our income is $20,000 above the limit. So we would multiply 50 by 20, and we would get $1,000 less. So now we would get $1,000 tax credit for our son Lucas because our income is a little bit above that threshold. You can clearly kind of extrapolate this further. Say if we have $440,000, that's the point at which now we've completely phased out, because if you do the math, 40,000 over, every $1,000 is $50. We've reduced the credit by $2,000. The credit is only $2,000. It's done. We phased it out. Okay, so that's the math on that. Let's talk about now the refundable portion of this tax credit. This is where this can become a huge tax break for people who are very low income, or maybe have a year where their income is very low. This isn't uncommon, as a lot of women give birth, take maternity leave. Some women stay at home and don't go back to the workforce at all, or maybe right away. And so a lot of times you'll see in the year of having a child, there's less income for a lot of these families. Okay, so the refundable portion of the tax credit is $1,700. So that means all other, factors not considered, if we don't owe any taxes on our tax return, the most amount of a refund that we're going to get due to this tax credit is $1,700, not the $2,000 of the full credit. So this means if I owe $1,000 in taxes, right, and I can claim the full child tax credit, the first $1,000 would fully offset. It would be a credit against the $1,000 I owe. I now owe zero taxes. Then I would get the refundable portion of the child tax credit. There'd be $1,000 left that is no longer that hasn't been factored in at this point. We're under the $1,700 limit, so we can get a full $1,000 back. If we owed zero in taxes, we would claim Lucas on our tax return. We would get our refundable portion, and that would be capped at $1,700 because we didn't owe any taxes. Okay, so with multiple children, let's say you have 4 kids, right? You might owe $5,000, but you've got 4 kids, right? So that's $8,000 of child tax credit. So you can erase the full $5,000, and now you've still got $3,000 across 4 kids. That's refundable to you. Okay, that's refundable to you. So that's how the tax credit works. It is a partially refundable credit, so you can get money back above and beyond what you even owe on your taxes. There are requirements of who qualifies as a qualifying child. Okay. And then you're going to claim this tax return on your taxes. And just to be thorough here, I'm going to look up real quick, because I don't remember the number off the top of my head of what exactly this tax form is. All right. You can claim the child tax credit by entering your children and other dependents on Form 1040, that's your normal tax return, and attaching a completed Schedule 8812. That's what it is. 8812, credits for qualifying children and other dependents. So that's where on the tax return you would claim this credit. Most of you won't need to know this because you're either going to have a tax preparer prepare it for you, or you're going to do it yourself through a program like TurboTax where they ask you questions. Do you have a kid? How old are they? What's their social? What's all the other info needed, and then they're going to automatically populate this Schedule 8812. So, but just for your information, that's where that information goes, okay? I'm trying to keep this episode a little bit short. I'm sure a lot of people have plans this week, and we are trying to a little bit consolidate episodes and be a little bit more succinct and kind of bite-sized with our knowledge each week. So I'm going to not exceed the 15 minutes this week. The last thing I'm going to talk about is there is an additional tax credit related to children, okay? And that's for the Childcare Tax Credit, okay? So I'm not going to go as deep into the details of this tax credit, or we'd exceed the 15 minutes and it's a whole other, it's got its own income thresholds. It has its own limitations, similar to the child tax credit. It has that $200,000 or $400,000 limitation where it starts to phase out. So does the child care tax credit. I want to say it's closer to $500,000, but I could be wrong on that. I'm just trying to remember here off the top of my head. So I just want to make sure it's on all of our listeners' radars as we're talking about what's available to you when you have children. The child tax credit's the big one, but then there's also child care tax credits. Okay, so if you pay for a nanny, a babysitter, you drop them off at daycare, you can substantiate those expenses, make sure you are tracking them, even if it's just you're writing checks to a daycare or you're writing checks to a nanny. Make sure that you're substantiating them so that you can provide the full number of total child care costs incurred during the year to your tax provider so that they can maximize this credit for you. A couple things to know about this tax credit is you do need information from the provider. You can check a box that says, I have made good faith repeated attempts to obtain this information, and they were not willing to provide it for me due to privacy reasons, whatever. And you can still claim the credit, but that's definitely going to slightly increase your risk of an audit. It's more of a red flag that you can't provide any sort of number. So if you're paying for somebody to babysit, before you hire them, you should definitely get a, what would be the form? A I-9, okay? Get an I-9 from them, which is the basic kind of employment authorization form for contractors, okay? Let me just double check that it's I-9 and that's not the one for W-2 employees here, but I'm fairly confident that's I-9. Employment eligibility verification, form I-9. Okay, no, that is the one for employees. So some of you that's relevant to, so understand, just make sure you check so you don't get in trouble, the eligibility rules of what requirements have to be met. Specifically, California is very strict, where if you have nannies, usually you have to hire them as a household employee and actually run payroll for them. So you might need the I-9, but that wasn't what I was thinking of. So if you're just paying somebody, checks, they're a contractor, you hire them very occasionally, it would be the W-9 form. So the W-9 form is just a form that ensures, yes, I'm authorized to work in the United States. Here's my name, social security number, address, all of those things. So make sure you collect that from them, because when you apply for that tax credit for childcare expenses at the end of the year, any given person who provided childcare to you, you have to put their name, their social, their address, okay, and the full amount of compensation paid to them during the year for childcare. So make sure that you have that information and you're not scrambling to get it at tax time. Again, if they're like, I really don't want to give you my social, you can still claim the child tax credit, the credit for child care expenses. Just understand it will increase your audit risk a little bit to have unsubstantiated child care costs. And also, it's going to create a question of, why are you paying this person if they haven't even provided to you any sort of information that has authorized them to do this service? So it is technically a requirement that you need to collect an I-9 or a W-9, depending on how you're hiring somebody, and getting their information prior to paying them for services. So it just puts you in a little bit of a pickle to not have any of this information. It raises a lot of red flags that are very unnecessary. Collect that information. Make sure you can substantiate it. The last thing I'm going to add real quick as we wrap this up and approach 15 minutes, both of these credits do have a floor of a level of income you have to make to apply. So you can't have 4 kids, not work at all, have zero earned income, and get $8,000, or you have 4 kids, so it's $1,700 per kid, so $6,800. That doesn't work. Both of these credits, you do have to have a baseline of earned income to qualify for the full $2,000 or $1,700 of the refundable portion, or also the childcare tax credit as well. So that's a conversation you should have with your tax provider, looking at your situation. How many kids do you have? What is your income? Making sure that you can maximize this tax credit. Otherwise, it might be a good idea to look at your income, especially maybe you have side income or self-employment income, or maybe you're debating, should I go back to work in December and take the rest of my leave in January, or should I take the full leave now all the way through December? That would be a good planning session to have with your tax professional to make sure that you're not failing to meet an income threshold that allows you to maximize your tax credit. So to give a very basic example here, let's say the floor for you, for your situation, your income, your amount of kids is $20,000, but you only have $15,000 of earned income. You might get $1,600 of the tax credit or $1,400 of the tax credit. You won't be able to apply for the full amount because you haven't hit the full floor of earned income necessary to claim the full credit. So that's important to understand. That amount changes based on the amount of kids that you have. So plan that with your tax professional, but understand that is a consideration. I do have some people who had years of low income. They were business owners, and so a lot of investment went into the business. They had some money built up. They were spending a lot of time with their kids, so they were home a lot. They didn't have a lot of earned income that year on their taxes, so they get to the end of the year. Hey, we had another kid. We have 3 kids now. Here you go. It's like, oh, I have some bad news for you. You're not going to be able to claim the full credit because your earned income is below that floor. So make sure that is in consideration for you as well. There's a maximum income you can reach where you start to phase out, but there is also a floor where you have to earn a certain amount of income to qualify for the full extent of the credit. Thank you so much for listening to another episode of The Tax Plan. I hope you learned something about how to save money this year. Thankful for everybody that listens, and thankful for my family and all of the blessings in my life this time of year. I hope this helped you in this episode focus a little bit on hopefully something you're very thankful for. We'll see you next week, and as always, invest early, invest often. Thanks.